You're watching Business Television India.
Hello and welcome. You're tuned into Call BTVi, your share, heading into the weekend markets in fine form. Lots of queries to answer over the next half hour. Let's first tell you the various ways you can use to get in touch with us. Send us an email. yourshare@btvi.in is our address. You can even record a video query and send it to us on that ID. Use the hashtag CallBTVi to connect with us on Twitter. And of course, you can also dial in on 022-4098-7300.
Well, let's start by introducing our guests joining us on the show. Gaurang Shah, Head Investment Strategist at Jurjit Financial Services, and Abhijit Paul of abhijitpaul.com. Welcome to the show. Thanks so much for joining in. We have our first query with us, and this is an email sent to us by Prasad from Hyderabad. He's bought 2,500 shares of Central Bank of India. The buy price is 34 rupees. Abhijit, let me take this to you. He's a long-term investor, wants to know the outlook for a Central Bank of India. Buy price of 34, what would you recommend?
Hi, good morning. The Central Bank of India, when I look at the medium-term, long-term charts, they're not very promising. The buy price is around 34, currently trading close to the 29 mark. It's in an emphatic downtrend, there's no doubt about it, and the momentum is also supporting the sell-off. So I sense that this kind of a phase which the central bank is going through, which is a little on the downside, is likely to continue. We need some confidence to come in terms of price, and that will come only once 33 is taken out on the upside. There's a lot to deal with on the upside if the stock has to move further up. The caveat is his buy price is close to the immediate resistance, which is the 33-34 zone. I would strongly suggest that in a bounce back, he should take it off and put in much better trending banking stocks if he wants to.
Okay, that's the view coming in on the stocks. A little dicey as far as the market action on a central bank goes, but essentially not too far from your cost. Please be very mindful of the levels mentioned here to protect any downside risks going forward. Next query of the day is from Raghavendra on the line in Bengaluru. Go ahead. What's your query?
Hi, good morning. I'm calling from Bangalore. I'm holding 10,000 shares of Ashok Leyland at a price of 135 rupees. This I purchased in the month of April or May. I don't remember exactly. I wanted to know, the 6 month target price for this scrip, whether should I hold or should I exit? Keeping in mind that, recently Hinduja Ventures divested shares of Hinduja Finance at the price of 153. So just wanted to know what is the 6 months view on this scrip.
6 month view, what's the sense coming in, Abhijit? Ashok Leyland got at 135, so losing a fair bit of money. We've seen the stock hold on to about 109, 110 odd levels. What would you recommend here?
Well, let's do a top-down chart approach over here with Ashok Leyland. The long-term charts are pretty good, and it's standing at close to strong support. And this is quite a wide support range. The psychological 100 was almost teased in the month of October. It came as low as 101.5. The long-term charts have not been damaged yet, and I sense that as long as the psychological zone of 100, 110 holds, the stock is trying its best to push itself on the upside. And sadly, it's got some serious resistances to deal with. Definitely should hold on to it. Any break below 105, 100 can trigger some more weakness, but I sense that the stock will try and probably move further up. The trigger in terms of price, which the stock needs, is to move above a couple of weeks back high, which is close to the 119, 120. I'm looking at the weekend, the 16th of November. The high of that week, which is close to the 120, is going to be a short-term trigger. Sustains above that level, I'm definite that your cost price will come. On the downside, a break of that week's low, which is 105, as I said, would probably inch the stock back to 100. But the long-term charts are still intact. Give it some more time.
Extend your time horizon, Raghavendra. Essentially, that's the advice. Long-term charts looking good, and you can remain invested in an Ashok Leyland. Let's get our next query then, and this is a tweet sent to us by Naveen. He's bought he's bought shares of Canfin Homes. We don't know the quantum, but gotten at a price of 473 rupees. He wants to hold on for 5 years and wants to know if he should continue adding to that stock. In fact, Gaurang, let me welcome you in on that note. Canfin Homes, we've had some easing come in temporarily from the RBI for a period of 6 months. It should be beneficiary to housing finance companies such as Canfin Homes. What's the view though with a 5-year time horizon?
So, morning to all of you, and sorry for getting connected a little bit late. We have a positive view from a long-term fundamental side on Canfin Homes, and in case if the investment is higher level, I think these corrections on fallback of little bit of disappointment earnings for Canfin Homes as well as for LIC Housing Finance is a great opportunity to average or even invest with a long-term time horizon. We believe earnings are negative on fallback of certain short to medium-term negativities, but long-term, I think earnings are definitely likely to improve on fallback of loan book growth. So stay invested, and if you got it at higher level, lower level should be used there for averaging.
Stay invested, and since you've gotten at a higher level, you can average at these levels as well. Long-term outlook extremely positive, and you can even add a L&T Finance if you are so inclined. Next query of the day is from Vishal Tagare on the line from Bhopal. Sir, क्या है आपका सवाल?
सर, मेरे पास L&T के 100 शेयर थे 1350 रुपए पे.
ओके.
और 10 शेयर है मारुति के 8000 रुपए पे.
ओके.
मैं इनका 2 साल में मतलब टारगेट जानना चाहता हूँ कि मैं किस टारगेट पे 2 साल में एक्सपेक्ट कर सकता हूँ और किस पे मुझे एग्जिट करना चाहिए.
Absolutely. Gaurang, L&T, Maruti, in the money on L&T, just off the money in a Maruti, but a 2-year view, where can you expect these stocks to go?
So, Dipanshu, with a long-term time horizon, I don't think you will be off the money in both the counters. The problem is short to medium term and the kind of consolidation zone that we are trading into. So on Maruti, with the long-term time horizon, we have a target first off for 9,500 and second, I believe, is 11,500. On L&T, I would request the time horizon to get extended to maybe about 2.5 to 3 year plus. In that case, anywhere between 1650 to 1850 should be the target on L&T.
ओके सर, तो बने रहिए. 2 साल छोड़ा टाइम होराइजन, इनफैक्ट आप इंक्रीज भी कर सकते हैं, स्पेशली L&T पे. 3 साल तक बने रहिए. 9,500 से 11,000 तक मारुति में जा सकता है और 1650 से 1850 तक L&T में जा सकता है. तो दोनों स्टॉक्स में बने रहिए, होल्ड करिए लॉन्ग टर्म के लिए, आपको अच्छे रिटर्न्स मिलेंगे. नेक्स्ट क्वेरी ऑफ द डे इज फ्रॉम हर्ष व्यास ऑन द लाइन फ्रॉम सूरत. गो अहेड सर, व्हाट्स योर क्वेरी?
Sir, I bought first source solution of 7,500 quantity at 42 rupees and 450 shares of Tech Mahindra at 380. So, sir, my question is, should I book profit or hold? And, sir, I'm very thankful if you share your view on FSL. FSL will get any benefit from CESC demerger process or not?
3 questions here, Gaurang. I'm not sure if you have a view on all of them, but essentially, what's the sense you have on a Tech Mahindra? Do you have a first source solution under coverage or not? And of course, on CESC, post the demerger that happens, who benefits and who does not?
So, first of all, his question was when to book profits. Profit booking depends upon an individual investor as to how much return you expect from the stock. And my sense is if you get 15-20% return, you should at least book part profit, if not all, and deploy that, capital and profit book into different stocks. Because, waiting endlessly in any stock and wanting to make higher and higher return on fallback of greed is never a right approach, because you end up never selling the stock and your greed never ends. So 15-20% or more you get, be happy, book part or complete profit and diversify. On first source, we don't have a coverage, so can't comment. On Tech Mahindra, long term, extremely positive. And in case if you get lower levels, you can even average. On CESC, post the demerger, value unlocking has already taken place. And my sense is that if you bought CESC pre-merger, before the demerger, my sense is that you should benefit, because now they will have separate segment of business and companies to concentrate and implement business strategy to grow the business forward. So if you bought before the demerger, continue to hold on CESC.
All right. So that's the view on a Tech Mahindra as far as CESC. You can continue remaining and invest in both those stocks. Abhijit, just comment on a first source solutions. The buy price here is 42 rupees. Can hold on for the long term. What's the view?
The good thing about the position is the buy price. The bad thing about FSL's chart is it's in a downtrend. Considering the fact that it's bouncing off for the last 3 days and it's hit close to the 47.5 mark, which is it's pretty good support. If you ask me, 45-50 zone is quite a significant support from a long-term perspective for FSL. I sense he should continue to hold on to it. On the upside, it's going to get capped first at close to that 56-58 zone. Not very confident about the medium to long-term bounce back. How much will it go further up? I think I'll get some more clarity when higher levels are being taken off comfortably. And higher levels, I mean, the first level is around 58 and the next level is around 64, 65. Above 65, it is an improved chart. It's a significantly improved chart. So keep a close watch on 58, which is likely 56, 58 zone, and then probably 64. Hold on to it. If you see follow-through selling coming in from 58, I would suggest to book some profits of FSL.
All right, so keep those levels in mind as far as the First Source Solutions is concerned. You can stay invested, hold on to this one for now, but look for levels above 58 and 60. We'll take a quick break. On that note, come back and answer a lot more of your queries. Both Abhijit as well as Gaurang are right here with us. Stay tuned.
Welcome back. You're tuned in to Call BTVi, your share. Let's get the next query of the day in. Mr. Prabhakar on the line from Mumbai. Go ahead, sir. What's your query?
हेलो
Yes, sir.
मैंने मान इंडस्ट्रीज खरीदा हुआ है, 2000 शेयर खरीदा है.
Okay.
95 के भाव से. और दूसरा पीटीसी इंडिया खरीदा हुआ है 2000 शेयर 120 के भाव से.
Okay.
तो मैं अभी क्या करूँ? अभी मेरा भाव तक आज तक रुक जाओ कि क्या करूँ, ये पूछने का है.
आप कितने टाइम के लिए होल्ड कर सकते हैं, सर?
अभी होल्ड तो पहले से मैं एक बरस किया है. अभी भाव आने तक मैं होल्ड कर सकता हूँ, ऐसा बोलता हूँ.
Okay. Abhijit, essentially he wants to recover his cost and maybe see a bit of a profit. Doesn't specifically have a time horizon in mind, but do you see him recovering his cost? Bought PTC India at 120 and Man Industries at 95.
Well, everyone wants to do that, recover his price and keep some profits. There is no exception about it. The exception is in the stocks and the sectors that we get ourselves into. So, Man Industries 73, quite a damaged medium-term chart. The long-term chart is completely stuck in a range. It's been within this range forever, it seems. It'll be tough. It's not impossible, but it'll be tough. 95 is his cost price. When I say tough, I would like to see the stock showing some improvement in price. Every time it bounces back, it is surely facing significant supply resistance on the upside. Bare minimum, it needs to take out that 84-85 zone. If it fails to do that, I think this stock is heading further down. 66, 66 acted as a pretty good support, so possible retest of 66 is definitely there. If you get it on a slightly higher price and if it inches very close to your cost price and you're fine with a 2 to 3 rupee or 4 rupee cut on your holding, I would suggest please take the profits off because it's going to test the patience out of it for sure. PTC on the other hand is an improving counter. His buy price is 120 and again possible, but it's going to take a lot of time. Improving because the trend, the short term and the medium term trends have improved. The risk in it is it's inching close to 84, 85, which is like the mother of all supply for the stock at this level. 84, 85 needs to be taken out. Breakout, I think there's 100 on the cards. But again, this stock doesn't move that fast. It's going to take your time. So both stocks will need a patience. Man Industries, in a bounce back, I'll request you to take out of your portfolio and invest somewhere better.
All right, sir. Man Industries पे जब भी थोड़ी रैली आई आपको शायद लॉस लेना पड़ेगा पर आप वो लेकर एग्जिट कर लीजिए. पीटीसी इंडिया फिलहाल आप होल्ड करिए. 84, 85 एक बहुत स्ट्रॉन्ग रेजिस्टेंस है. अगर ये स्टॉक उस रेजिस्टेंस को क्रॉस कर लेता है तो शायद 100 तक जा सकता है. उस लेवल पे आप एक बार फिर से इस स्टॉक को ज़रूर रिविजिट कर लीजिएगा.
All right, our next caller is Vikram Shukla on the phone line from Mumbai. Go ahead, sir. What's your query?
Yeah, very good morning, afternoon.
Good morning.
And first of all, congratulations for conducting nicely this channel.
Thank you so much.
I have a query about Pidilite Industry and ABB India.
Yeah. All right, what is the buy price for both?
Yeah, I have purchased Pidilite at average price of 625, and I am purchasing it since 2011 to till yesterday date. My first buying was around 80 rupees, and last buying is around 1140 yesterday. So shall I hold it? And I am a long-term investor.
All right. And ABB India, what's the buy price?
Yeah, ABB is around 825 is my cost, and 250 shares. And it is also since very long time I am holding it.
All right, Gaurang, over to you then. He's a long-term investor. He's been adding to Pidilite. The average buy price is about 625. ABB India, similarly, 825 or so. Willing to hold still for the long term. What's the outlook?
So first of all, don't try to allocate large part of the capital to both the stocks, because overexposure to any particular stocks or few stocks always leads to a little bit of disappointment. Just be careful about it. Don't allocate large part of your capital to limited number of stocks. That's high risk again. Secondly, on Pidilite, we have a target of 1275 on fallback of whatever earnings we've seen. In case the future earnings improve, we will revise it upwards. And I'm quite sure with some of the products that they have launched very recently, they have found great, market share in terms of penetration as well as product liking. And they have a monopoly, actually, if you go to see in the kind of, product offering that they have. So stay invested in Pidilite. ABB, it's a cap goods engineering stock according to us. And 3.5 year plus should see targets of somewhere close to about 1,050 to 1125 long term again.
Right. So you're comfortably in the money in both of these counters, but you can continue to keep faith over here for the long term if you do so desire, both on Pidilite and ABB India. The outlook is positive. ABB India, possibly a slightly longer term outview. So maybe another 3 years, hold on to this and you can see very good returns. And Pidilite, as Gaurang said, nothing to worry about. Hold on to this. You will keep getting good returns over there as well. Next query of the day is from Sam on the line in New Delhi. Go ahead. What's your query?
Hi, thank you for taking the call. And I have a query on electric vehicle thing. And I'm not very sure about which stock like M&M or Tata Motors. Both of are manufacturing electric cars and all. So which one will be the best bet in longer term, say 5 to 10 years?
Okay.
And one more question for PFC India, which I'm holding around 100 stocks. And what is the future outlook? And another for ITC, which I have around 200 stocks at 275.
Okay. Gaurang, ITC, PFC for the long term, what would you say? An interesting one, wants to bet on the electric vehicle space, get in early, 8 to 10 year time horizon. Which companies, which stocks should you look at? M&M, Tata Motors have some interest. There are a couple of bus makers as well. You also have Bosch, which is trying to lead that electric revolution. What would you recommend here?
So first on ITC, hold on 345, 365 the target. On PFC, try to lighten up the stock at higher levels and move into Ashok Leyland if you want to follow the theme of electric vehicle, commercial vehicles, and already they are at the advanced stages of, making a prototype and testing it, etc. In fact, Dipanshu, all automobile manufacturing companies, four-wheeler commercial vehicles, having a prototype and ready to launch as and when they get the green signal and the appropriate backdrop in terms of concession, tax structure, affordable price tag, charging infrastructure, etc., etc. So you can pick and choose from Maruti, M&M or Tata Motors, whichever you like. Well, if I was him, I would possibly go for either Maruti or an M&M. Tata Motors is seeing a little bit difficult in the fallback of JLR disappointment, but we remain positive over there as well. And one more thing is that a full-fledged rollout of electric vehicle it's quite a long time away. So I don't think that's going to be immediately impacting the current conventional vehicles which are manufactured, driven by petrol, diesel, etc. And of course, like I mentioned, all companies are capable and already having at different levels prototypes being tested. You can pick and choose whichever stocks you understand is the best.
All right, so any of them, the auto majors, would be a good bet as far as the electric vehicle theme is concerned. You do have a long time horizon. You're willing to bet on that theme. Maruti M&M, though, are the preferences there from Gaurang. In fact, as for PFs, you can book out of that one and switch over to an Ashok Leyland as well from the same space. ITC, remain invested, 345, 365 kind of targets that you can look for on that one. Hope we could help you with your query. Our next query is a tweet sent to us by Deepak. 2 questions. 90 shares of BEL. Abhijit, let me take this one to you. 111 is the buy price, and 50 shares of HDIL got in at 104. No time horizon mentioned, but wants to know the target and the kind of outlook, what the expectation should be. BEL at 111, HDIL at 104.
Definitely in a strong downtrend. It's given a bounce back, then it's giving that significant part of its bounce back again. So it's fallen quite sharply, it's fallen quite a distance, so it's going to take its time. It's not going to be that easy. It's not going to probably turn around like a V recovery. Like, it's not going to turn on a dime. In this recent bounce back, one thing was established in the charts of BEL, that this 98, 99, 100 psychological levels have been proved as a very strong support and now as a very strong resistance. So 100, 98, 99, 100. This is a zone that the stock needs to take out. And if it does, then 111 will fall short. We'll see much further higher levels than 111. So he needs probably to hold on to it. On the downside, don't be too surprised if it retests the current lows of 75. HDIL, not the best of charts again. Quite a weak trend from the medium to long-term perspective. His cost price is close to 104.20. He's been probably given a lot of time to his holding in HDIL. I'm quite sure that he will probably do so. But exit, get into much better stocks in the sector or some other sectors. Why would you like to, hold your capital back into a stock which is in a downtrend for such a long time?
Stay away from an HDIL, exit on any up move that you see over there. On BEL, possibly watch out for levels of 100. It may take a while to get there, but if it does, then you can maybe reduce your loss and get out at that level. But completely out of time on that edition of Call BTVi. Gaurang and Abhijit, thanks so much for joining in. Have a good weekend, gentlemen. We'll be back on Monday with a fresh edition of Call BTVi, your share. Thank you for watching. And do keep tuning in and do keep sending us your query. We'll make sure they're answered on the show.